Okay,
Yeah.
so what I'm going to do is just jump to very quickly. There's another example of the day trading that I'm talking about, the rules that you kind of adhere to. And I've got a trade on at the moment. I literally put it on just before we came on. And again, I just want to go through the rules with you and why it's very important to follow the rules. So I think just for this example, you can see I'm up about €30 here. I only put it on 15 minutes ago. And I have a little alert here for when RSI hits 50. And then I have a limit price in of closing it out for 10 points higher. So whichever comes first. And I'm very close to both at the moment. So that's going to trigger probably when one way or the other when we're online, right? But I just want to go through the trade on a bigger chart here just to make it easier for you to see. It was the US dollar, Japanese yen. And I suppose this is your daily view, and you can see we're making lower lows and lower highs at this minute in time. So to go long on this at the moment on a short-term chart, you have to be very strict. So I'm going into my 15-minute window. I got my alert back here. RSI is below, 30. Didn't trade it because we're creating these lower lows and lower highs. So I drew this trend line on the 15-minute chart, as you can see, and we literally broke out of it just before I came on air. I put the trade on, went long, and I have an alert in here as well at, when RSI gets to 50 or whatever. So the reason this, and I've set my stop tighter here, guys, and I want to show you why. This low that was put in here is lower than this low here. So now we're kind of going, okay, well, where's next support if this doesn't hold? And you can see I'm kind of zooming out quite a bit. I'll draw a horizontal line to find that next support. Where are we going? So we're talking about down here, which is at 154.49, which is quite a bit lower, right? So what I did was, instead of doing my usual amount of points that I'm going to get rid of that just for a second. I just said on my stop loss on this particular trade, just because I feel the drop could be lower if it came back, I just put it below this low here. So we go back to the IG trading platform. I'll go into our position here. You can see where my stop loss is set. It's this red dotted line, and it's just below the recent lows, if that makes sense to you. So it's just another example that the RSI alert that you get, that's literally like your wake-up call. It's like an alarm clock in the morning. Okay, guys, there might be a trade forming here. It doesn't mean you push the button. You've got to establish the downtrend is over if you're going to go long, or if it's you're going to go short, the uptrend is over. And again, you check your news flow and everything like that. So that trade is ongoing there. What are we up at the minute? 22.50, 20. It's starting to come back a bit here. So I entered it at what price? I entered it at 15,472. My limit is 15,482, which is 10 points. We're at 15,475. So we're about 7 points away from getting filled. But again, my secondary exit is if RSI hits 50. Now that's only useful if you're sitting here watching the screen as such, but you can go in and set an alert then the minute you place the trade to say when RSI hits 50, please let me know, if that makes sense. So have you any questions on that, guys? No?
No. Just need to spend more time going through the platform, and the webinars that you've issued on it or sent out on it.
Yeah, and if you go to your members area, so go to log in on the members area and click on knowledge base here, Michael, right? Go to spread betting courses. And every time I do an example like this morning, I put it in there. So the day trading rule book, that's the course that basically I'm talking about now. And you can see here, I've put in a real life example. I'm putting in real life examples as and when they arise. I'm adding the videos to them as well. So there's this morning's one here, and it's just to give you a real life example. So if you do that one for the day trading one, and then if we come back here and you look at, let's say, your high probability option trade, that's spelled out as well as to how we go about going doing that as well. And again, when we're doing real life trades, we're tracking it and putting them in there just to give you examples. So if we go back to our platform here, That's our S&P 500 short put there. When we put that trade on, I think the probability was 86, 87%. It's now it's actually showing 100%, believe it or not. And you can see we're up there. You know, when we opened that trade, we bet 10 a point at 25.89, right? So that was the premium on the option multiplied by 10. So that's our max profit. And now we could buy ourselves out of this contract at 405. So our profit or loss is $218. So that's a return in 2 weeks there, guys, of just under 2% on this portfolio here. So for people who are based in Ireland and the UK, I can't stress it enough. If you're using the short put strategy, which is what this is, as a return-based strategy. So what I mean by a return-based strategy is you've no intention of taking assignment to the shares. You're just trying to make money. Then it makes no sense doing it in any other platform bar a tax-free environment. Also for people who've got smaller accounts, because, for example, this is only a 12K account. So if you think about it, you don't have the same assignment rules in this as you do with a traditional options trade, where each contract represents 100 shares. So this one, it's literally a bet, and what you're hoping for here is it doesn't drop below 6,200, and you're losing statistics to your advantage here. It doesn't mean you're guaranteed to win, guys. You know, 1 in every 10 of these trades need to be managed. That's our statistic, at least for 20 years of trading. But what I'm saying is, you know, if you know how to manage it when it does come under pressure, this really should form the majority of your trading activity to generate consistent returns, if that makes sense.
But 6,200 is way off where it's currently trading as well.
Absolutely. Like if you look at it here, here we are now. I'm going to turn this into a daily chart, Michael. You can see here, that's where we are now, and I'll point to where 6,200 is. Let me get that. It's roughly just above that 200-day moving average. I'll put it up here. So in terms of that, expires in 2 weeks, that trade. So the S&P would have to fall 9% in the next 2 weeks in order to be in trouble on that trade. You know, now what I will say to you is, some people looking at that, if you're a Bitcoin trader or a I don't know, you're trading high volatile stocks, 9% seems like nothing. Actually, it could happen in a day, and you're right. But when you're trading an index, the actual stats on the S&P 500 it doesn't move as volatile as anything else. And the actual stats are, statistically speaking, that's a 2 standard deviation move. In other words, you have less than a 5% chance of that happening in the next 2 weeks. And that's why, if you think about it, that trade we have on, Michael, S&P can do this, it can do that, and it can do this. As long as it stays above this area here, we're going to make our full profit, you know. And that's why the probability of the trade is so high. And I can't stress enough, on indexes, apply that strategy. I wouldn't do it on individual stocks. If that, and I hope that's fairly clear. Individual stocks, anything can happen overnight. Like even Nvidia, you know, the darling of Wall Street for the last number of years. Look what's starting to happen in Nvidia now. And there's news out on Google today as well that they may start competing by creating their own chips with Nvidia. And that's starting to get rumored out there now as well. So, you know, Nvidia might have more to fall here, because think about it, they've had this whole market to themselves up until recently. So maybe the year is starting to come out of Nvidia. It's still holding up there, and it's still worth this share price. So don't get me wrong on that, based on what they're doing. But as more and more competition comes into play, I think that could come under pressure. And that's the reason why I'm saying, don't apply that short put strategy to individual equities. You're asking for trouble. You don't need to do that. Use statistics to your advantage.
In the case of the SPY there with in the IG platform, would you stick with the monthlies, or would you vary it to the weeklies as well? I've only played around with the demo account at the moment.
Oh, with the IG, you can do whatever you want there. So the only thing I'd say to you is, let's say we're going to go in and trade an option here, and we look at the US 500 is what it's called here. So that's the S&P 500, okay? Yeah. So let's say we go to a weekly, let's call it, I don't know, December the 10th, right? To get a premium, now this is expiring exactly 1 week from now, or sorry, 6 days from now.
Mm.
Look where you're selling your put option. Your strike prices are coming way up. Now, statistically, you're still going to have a high probability of winning.
Yeah.
But look at the premiums you're getting here, Michael.
Yeah, I see that, yeah.
So for me, I think you're better off, in my opinion, and the sweet spot in option pricing, by the way. So you're not going to see this in any course when you look at spread betting, right? But is 30 to 60 days out, and usually around 45 for options. So there you go, guys. I'm out there. Sorry, Michael, I'll come back to that there.
See
We've
that,
jumped. So we got our 10 points, we're out, trade done. So another successful trade using the rules, So just wanted to highlight US dollar, that's live. Went through the example with you, okay? So back to what I was saying there, Michael. Apologies for jumping off there. Just wanted to show you that. But again, just go back to our weeklies. It's just the premium you're getting in, and you're going to have to bring your strike well up to close to where you are now. So let's say, for argument's sake, I don't know, there's some bad news event overnight and the market starts giving back some of its gains. You're managing that straight away. Now, it's easy to manage if you're quick enough, but it's just me, and knowing how options are priced, 30 to 60 days out gives you it gives you what they call the sweet spot in terms of selling the premium now to benefit from time decay in the future. And I much prefer just keeping it simple. So let's say this is a 12K account, and what I would recommend people do is, right, let's say you set yourself a target on your option trades of 2% tax-free a month, for example. So I will be looking at where could I go and place that trade. So at the moment, we're using up on the existing trade just under €3,000 of margin. Now, again, that's not your traditional margin that you would see in a normal brokerage account. This is basically saying we're setting aside 3 grand of your 12K account. So you're only allowed trade with 9 now, because you've got this trade on, right? And that margin goes up and down as the position improves or disimproves, okay? So we could have really doubled that, to be quite honest with you, and this could be a 4% return on investment. But let's say your target is 2, right? Every month I'd be going, where can I sell my strike price 30 days from now and get my 2% return tax-free? And that's all I'd be looking at. So for example, if I started lining up now, I'm going to go out to the January expiry. And I know that I need to take in, to generate 2%, I need to take in about 240, okay? So if I go down here and I say, right, where in January, here we go. Let's say the 6,300 puts. That's what I'd be looking at there. I'd be kind of going, okay, if I put a bet size of 10 on it, I know that I'm increasing my margin by 2,900. But as long as the S&P 500 doesn't fall by 6,300 between now and January the 16th, I'm going to make my 2% return on investment tax-free.
Get it.
Does that make sense?
It does, yeah.
I just think it's so much more structured. It's less of a roll of the dice. And you know what it does, Michael? It gives you time. So let's say, for argument's sake, next week, all hell breaks loose in the stock market and we're down at 6,600. Then your ears are getting you're getting alerted of a lot of time to run to this January expiry. So, and then we're at 6,400. Then what you can do is just buy yourself out of this contract, open up February, roll that down. And now I'm already planning my risk management. Where could I roll that down to in February? Okay. So I know that, let's say, for argument's sake, this one we put on now, to buy it back would cost me 25. So now I go to February and I'll go, okay, if I went out to February now, where would 25 get me? So look where we're going. We're already down to in and around 5,800.
Yeah.
So I know already, before I put this trade on, if the SH1T hits the fan, I can reduce my break even all the way down to 5,800 on this. Does that make sense?
It does, yeah.
And it's just so much easier for risk management than the weeklies. But having said that, the weeklies can work as well. And it really comes down to how much time have you got to put into this.
Yeah. I noticed the spread can be quite wide in it at times.
Yeah, that's it, and it's wider, by the way, on the FTSE. So if you're doing it on the FTSE, that's why the S&P 500 is just so liquid. It's the most liquid options market in the world, you know. So that's why that this is actually a narrow spread. But just to remind you, and the reason why I say a normal spread bet's like what we put on today on the US dollar versus the Japanese yen. If we held that trade overnight, you're getting charged an overnight holding fee. On this, on the options, you're not. So this is where they make their money off you, right at the beginning of the trade. So if we put this bet on now, for example, I sell 10. If you think about it, if I was to buy myself back out of it, I'm already down because I'd have to pay out 27 to buy myself back out.
Yeah.
That's the way they make money off you, okay? So it's one of those things you just kind of got to put up with it, really, you know? But it's not bad considering, you know, the tax, you know, implications here for people in the UK and Ireland. There is none, you know? And I just love it in terms of a strategy. It's just, I just think it should form the basis of everybody's portfolio, and stop just looking for the quick wins every day. You know, don't get me wrong. I enjoy placing a trade every day as much as anybody else, but there's small amounts of my portfolio. The majority of it should be in trades like this, where your odds are 90% or higher.
Yeah.
Is that okay, Michael?
Of course, yeah.
Is there any questions on that, guys? Are you happy out on that? Okay. So just look, guys, I started to close out stuff today. This is going to be closed out, the traditional options, okay? So for those of you who are in traditional options, so what I'd be saying to you is, I'm going to try and marry the two now. I'll be closing out my spread bet today. And the great thing about this one, you can close that 24/5 as well. So that's trading throughout the night, 24 hours a day. So look, I'm going to close it now, look. And we've taken our profit off the table. We made a profit of €186. That's gone. Whereas you have to wait for the options market to open to close these ones, okay? So for me, this is kind of a no-brainer in terms of where you trade between the UK and Ireland. But today I'm going to close this out. And again, just to go through the numbers on you, we've made a 91% of our max profit here. So we took in $499 for insurance SPY to the value of 620. That insurance contract is only worth 45 now. So in essence, we could buy ourselves back out of that for $45 and make a clear profit. So I'm going to do that today. That's going to be shut down. Everybody asks me, why don't we just let it run to expiry? It pretty much has no chance. And you're right. There's nothing wrong with letting it run to expiry. The only reason I'm doing that now is what happens, for example, I don't know, something off the wall happens, SPY does a little bit of this, starts falling down. You could actually sell that exact same contract again and generate even more premium. So for the sake of $50, is it worth holding on to? And everybody is different in that argument. And it really depends on the size of your account and a lot of different bits and pieces going on there. So just to get into a disciplined route, especially if you're spread betting it like we were, maybe when you get into 70 to 90% of your max profit, take the table off, the profit off the table, if that makes sense.
Just on the SPY trade, like say you're looking at it there, like just under 50 cents to buy it out last night. And if you did buy it out, like with the market currently where it is, would you see it worthwhile selling the December 31st at 6:30?
No, Michael, I wouldn't. I tell you why. I want to see a pullback first.
Yeah.
And I'm just looking at the chart here. So one or two things is going to happen, in my opinion. Now, my best guess is, right, that you're going to be right. And this is going to push higher. That's my best guess. Having said that, look, we're up against a resistance point right there.
Yeah.
And then the next one is not too far away. So I think there's a possibility the market might get a little bit tired here and come back a little bit. And then I would do it.
Yeah.
Because what's going to happen then? Your VIX is going to go up.
Mm-hmm.
Look, your VIX is at 16 now. So that's telling you the premiums you're getting in are very low at the moment. You want to see your VIX above 20, if possible. It's not going to be always possible, guys. But so I would be patient and wait and see, can we get a little bit of an increase in volatility before I place that trade?
No, I'm not being impatient. Like, it's just
Yeah. Oh, yeah. Absolutely. I get it, Michael. Yeah, 100%. So I'm just checking. I think I got another alert there on something. Did I? I did. Japanese yen again. Oh, that was my alert coming in for close 50. So the RSI got 50. So again, just how you would use the alert system. We actually got out before the RSI got hit. We got our 10 points. But just again, that shows you how you can use these alerts to your advantage. So you don't have to be watching the screen all the time, you know. So, let's say for argument's sake, we didn't reach our 10 points. We would have got this alert. I would have logged in, closed out my position, gone, whatever profit we've made. So just looking there while we're on this, because actually, let me go back here for a second. So we closed out of Domino's the other day. Just on another note as well, Alaska had a big day yesterday. It was up 6%.
Yeah.
So for those of you who averaged in again down at 41.40, fair play to you. You're well in profit now on that. So like the plan is still to hold that up to about $55. So I just thought I'd mention that very quickly.
I was assigned in that.
Oh, brilliant.
Yeah.
Brilliant. Then the other ones there, just on oil, guys. Oil's creeping back up again. I just think it makes more sense to be trading the currencies the way we're trading, just given that the risks that are out there with oil at this minute in time. So I'd much rather just stick with the currency trading for now and gold, because gold has been very, very good. And again, just applying that strategy with gold. There's one we got this morning. I didn't put it out, but you would have got your profit. You'd be in and out already on gold. That has been very, very good, because if you switch gold back to a daily chart, it's gone pretty much into consolidation mode here. We're starting to consolidate here with a bias to being up again. So anytime you get a bullish RSI cross on the short-term chart, I think it's not a bad one to trade either. Okay. So I'll just go through each of the currencies now to see where we're at. So you can see the euro dollar. This is your daily chart. I want to go to 15-minute ones now, just in case there's stuff starting to form. So there you go. You got your 15-minute sell-off on this one not so long ago. British pounds was earlier on this morning. You can see, guys, there's a trend. This strategy works when you apply it correctly. We've just done the US dollar, Japanese yen. So, yeah. So, I think you really need to just jump into these courses, guys, and follow them and practice in a demo account first. And then if at any stage of any questions or you're unsure, just ask me. Jump into that day trading rule book and practice away. The great thing about this is, taking 2 weeks to practice, for example, there's going to be trades here for you in 2 weeks' time. You're not missing out on anything. But you're much better off getting your strategy nailed and making sure you can consistently do it right. The short put strategy is different. To me, that's when the opportunity arises. So, for example, if we got a bit of volatility in the next 2 or 3 days, it's just my opinion. If you've no short puts outstanding, you should start applying them again.
Yeah.
Any questions? Any stocks you want me to look at? Somebody asked me just to mention about Bitcoin today, so I'll just have a quick mention on it here. It's after recovering nicely there now. So we're getting close to being able to say, if I just we're getting close to being able to say that this downtrend is coming to an end, but we're not there yet. So we're right up against that downtrend. What is positive about Bitcoin at the moment is the fact that this recovery high here was taken out yesterday and today. Okay, so you can see that high is higher there. So that's a positive, right? But if that doesn't hold and we start making our way back down, this will be the next area. So another positive at the minute is that this low was higher than this low here. So the bear is pushing it down. It didn't happen. So we're not out of the woods yet on Bitcoin, but I'd say we're getting close. And I think maybe the next couple of days trading will dictate where we go on Bitcoin. So if we break above there, I think we're kind of going to go back to 100.
What trade would you put on, Stephen? If it comes down to the point that you're comfortable to trade, what trade would you put on?
Well, the simplest one, Pat, that you don't have to get too stressed about is just buy IBIT, right?
Yeah.
Which basically tracks Bitcoin prices. Having said that, the more and more research you do, the stable coins are becoming so popular that they reckon that the demand for Bitcoin is waning as a result. So that might have an impact on demand, right? So don't forget, you're dealing with it still. This is a relatively new entity. And the market makers, one market maker has gone under already because they couldn't keep up with the order flow, and they got themselves into trouble. So just to explain what I'm talking about, I want you to imagine all of us on this web meeting right now have bought a seat on an exchange to make a market in Bitcoin. So we're matching buyers and sellers together, right? Now, as part of that, we must be the counterparty to anybody looking to sell or to buy if there's nobody else on the opposite side of the trade. That's part of the rule of being a market maker. And the problem with that is, if, for example, some funds have set strategies and liquidation events and start selling and selling and selling, it actually triggers more selling in other accounts because most people in this are leveraged. And therefore, we're meeting lots and lots and lots of selling pressure by trying to prop up the market as such, by coming in and buying, being the opposite side of the trade. And then we get into trouble, which means we have to sell. And then that's what happened in October. It became a self-fulfilling prophecy then. So it was more of a technical issue with the market makers that caused that sell-off, as opposed to demand, really, to being demand-led. And because market makers had to liquidate, that caused this, which caused retail investors to liquidate. So that's the downside, I suppose, of institutions being involved in Bitcoin. So the question you asked me, Pat, and I know it's a long-winded answer, and just trying to cover all bases, that it really depends on what camp you're looking at. But for me, if there was a retest of Bitcoin, if Bitcoin came down here and tested this area here, I would start to build a position. And I don't know if you remember, we talked about 10 to 15% of your portfolio in risk. I would consider this high risk, right? And at that stage, I might put 7.5% in here, because the reason I'm saying that is, if this doesn't hold, this is the area I'm talking about, that doesn't hold, look at the drop. I'm talking about going into this area next. Doesn't look like a lot, but that's actually 20,000 less. It's nearly another 30% lower. So what I'd say is I'd put half what I intend to put into it here and another half down there, and then I would just hold it for the long term, and see. My view is the market makers and all will resolve all those issues over time, and then the only risk at that point is, you know, at this moment in time, and it's just my opinion, and I'm going to get absolutely lambasted for saying this. I know people will disagree with me. At the moment, Bitcoin is digital coin, digital gold, and in my opinion, gold is useless. I think gold is absolutely useless. I don't know why it's so valuable. Just because governments store it and see it as a store of wealth. Think about what it does from a physical perspective. Bar making jewelry, it's good for nothing. So why is it so valuable? And at this moment in time, people, what can you do with Bitcoin? You might be able to buy a Tesla or something like that with it, but other than that, what can you actually transact in it? Very little.
Yeah.
So that's just my opinion on it, right? Yeah. But it doesn't mean I'm not going to trade gold or trade Bitcoin now from now on. But I'm just telling you, it would not surprise me if one day, it wouldn't be a total surprise if Bitcoin collapsed altogether. Because it's so new, and if the market makers can't keep up, it could get into trouble from technical issues and get lost before it even gets started. But it doesn't look like that's going to happen. But what I'm saying is, I'm just trying to paint out all the risks that are there. So that's why I'm saying no more than 10 or 15% in. And in answer to your question, Pat, I'm going to get there now. 10 minutes later, if it came down to 77,000, I would start building my position. And then if it dropped further, I would add more. And then
And
I would.
this is an IB trade, not an IG trade.
It would, yeah, I wouldn't spread bet it. Yeah, I think you have to do it in like a traditional brokerage account, you know, because you're going to get charged lots of overnight fees. But the upside is, if it did get down to this level, you could be looking at a double on it within a year, you know, and that's why I would participate in it, but only with my risk portion. So if you have 100 grand in your account, I'd be saying no more than 15K total in this, and start off with a 7K investment, you know.
Yeah. Is it actually difficult to liquidate out of Bitcoin back into the euro or back into the US dollars? Or
no, well, from this ETF, no. So this trades like a stock. So that's the way I would do it to keep it simple.
Yeah, no, it's just a general. I won't be trading it personally anyway. So
yeah, it's just a simple one there. Absolutely, I would use IBIT. This is another one here. It's more volatile, as you can see, and it's not just linked to Bitcoin. So this one trades quite volatile. You can see that's come down from like 60 down to 30 in the same period of time. So that's halved in value. Bitcoin has only gone down by 25% in that period of time. So you can see that's moving more aggressively. So the good news on this one, if you're right and you do buy it, it's going to move up quicker. So the moves on this, like these candles look really small, and you think, oh, that's nothing. That's a 10% move that day. You know, that one's a 12% move. This one is a 4% move, a 9% move. That's a 19% move. That's how, you know, the candles don't do, it's just the scale of the chart kind of sometimes make it look as if they're tiny moves. They're not. This thing is moving aggressively. So, you know, if you wanted to have a bit of a real punt at it, I go with this one, you know, and when the time is right. But again, no more than 15% of your overall portfolio in the overall trade. And I wouldn't go in all at once. You know, have some there to average in. Does that make sense?
it does, yeah.
Yeah, but the day trading stuff, guys, I'd stick to gold and the currencies for now. And then, as I said, the short put strategy should form the basis there. And if you're living in the UK and Ireland, or you have a small account, do it in the tax-free environment. It's just makes sense, you know. So that's what I wanted to cover today, guys. Unless you have any other questions for me.
Thanks, Stephen.
No, okay, I'm going to leave it there. So, folks, you know where I am if you need me. And oh, finally, I just wanted to mention Christmas arrangements, guys. So the Monday of Christmas week, I think it's the 21st, will be the last day for webinars as such. So if you want to book one-to-ones with me, and then obviously we'll start back up in the new year. The weekly group call obviously won't go ahead during the Christmas holidays. And we'll start back up in the 1st. So it's I'll send out a note, but just take it that from I think the 21st it is, from then on until the 5th of January, there'll be no webinars, but there will be the daily market updates when the market is open. So that will still be happening, and I'll be alerting you. And if I think there's something really happening in the market, I'll call a meeting and I'll record it, and whoever can attend can attend.
Okay.
But absent to that, there won't be any webinars during that period. Okay.
Thanks, Stephen.
All right, guys. Thanks. Bye for now.
Take care.
Bye-bye.